All right, good evening, guys. We're just gonna give some of these folks another 3 more minutes while I set up the live stream. If you guys are not able to hear me or you can't see the display correctly, feel free to put it in the messages or the chat so that I can actually rectify them. If you guys can see the live stream correctly, can you guys just put a ping, a thumbs up to say that you can actually see the display correctly? I'm showing the slide for today. Okay, yeah. Yeah, just let me know if you can't see the display properly. I will try and see how we can actually correct that. Just waiting for a couple more people to come in. We'll start at 4 o'clock Singapore time. Today's session is only a half an hour session, and we'll be going through the setups for gold for the next two trading sessions and then for next week as well. Okay, maybe I'll just go through the introduction first. As people come in, just to orientate you guys to how we're going to do this webinar. There is a Q&A. If you're on Zoom, there is a Q&A component here where you can actually type in any questions. I'll check that Q&A from time to time and try and answer all of those questions. If you're on the live stream, feel free to put a comment down, your questions or comments in the chat, and I will answer those as well. Okay, so let's go in. I'll start off with the slides, some introduction, and then we go into the charts. Okay, my name is Sherman, and together with Vantage, we are going to go through the price action for gold today, 13th of October. My background is in algorithmic trading, so a lot of the things that I'll go through is based on the way you can actually it's very systematic, and all of these techniques can be coded if you can basically rules that are in place that are very systematic, and if you follow them step by step, basically you can get the analysis by yourself as well. Okay, so a disclaimer, all of this, the things that we're going through today, all of these are high risk instruments. Make sure you seek independent advice if necessary. Do not follow the trading signals blindly. Make sure that you have read all legal documents and ensure you fully understand the risk before you make any trading decisions. Okay, cool. I'm just going to go through the charts today. And how we're going to do this is the same as the previous session. We will be going through the pivot points, how that works, and then we'll go into the analysis. Okay, so today is on gold. I'm just going to remove all of the analysis that we have done previously. Or maybe we'll just go through what we went through the last time around. So the last session was on Wednesday. And Wednesday was 11th. And we were looking at this analysis here. Okay, we were hoping that the price will bounce off this two support level, but we didn't get down to this level. The idea was for us to actually sell off at the daily, all right, and so price moved in our direction, right, and then yesterday's CPI data got us back to the same support region, and then now we're back up here. Okay, so again, I'm just going to remove all of the analysis here, and then we'll go through step by step how we can actually derive the trading setup for today. Okay, So the indicator that I'm using right here is okay. First, the tool that I'm using is TradingView. You can use any tool that you prefer, MT4, TradingView, MT5. Okay, but I'm gonna use TradingView for today. The indicator that I'm using is the pivot points. Basically, pivot points are it's a kind of like a standard indicator, which is a leading one. So you can actually use any pivot points under indicators, right? The one I'm using is called Wayne's pivot. The reason why I'm using this is because there are some nice highlights of target zones and entry zones. Okay. So to begin, right, the pivot points are basically 9 lines in a given period, right? And the most important line is the pivot line as highlighted in this border stroke here, right? And you will have 2 resistance line R1 and R2 above the pivot lines and S1 and S2 below the pivot points. Any lines in between the major points are basically called the middle lines. Okay, that's kind of pretty straightforward. We have 2 zones to take note of. Between M1 and S2, that's your target sell zone. So if you're selling above the pivot point, your target zone is the M1, S2. And if you're a bullish narrative, basically your target zone is between M4 and R2. Okay. How you derive all these lines, right? Why are they called leading indicators? Because why is it called a leading indicator? Because the points here are all derived from the open, high, low, and close of the previous period and are drawn at the start of each period. So at the start of this 4 hours, all of these lines are projected and will not be repainted. These lines are fixed and they will not be repainted, and so on and so forth, right? So for now, the next 4 hours, you see that these lines, the next 9 pivot lines, right? They will be dynamic. They'll be moving up and down depending on the open, high, low, close of this current 4 hours period. Okay, prices can behave in 2 manners with pivot points. One is that 90% of the time, prices will fall within R2 and S2, so above S2 and below R2. 10% of the time, it will fall out of the range, right? So when you get something like a ranging period, right, you get a smaller range between R2 and S2, and it allows price to break out of the zone more easily. Okay, so that's kind of like the narrative. That's kind of like how you use the pivot points. So the first step to actually identify the trend, right, is to use to see where prices actually what's the last narrative based on prices and the pivot points. Okay. So if prices fall above closes above R2, then we say that it's a bullish narrative. If it falls below S2 for a given period of day, now we're looking at the Wayne's pivot on a daily basis, right? How you change the time frame, go to the settings cog, and under time frame, yeah, you can change to any time frame they're looking at. For convenience sake, you can actually put the weekly, daily, 4 hourly, and 1 hour here. The lower the time frame, the more noise you'll get. So it might not be according to plan, and also depending on whether are you a intraday trader, are you a swing trader, or are you a scalper, right? So if you're a swing trader and you're kind of like more of a day trader, you're trading within the next 4 hours, then you should just be using the daily and the 4 hours. Okay, that alone can allow you to enter at least 2 to 3 trades every per trading session. Okay, so the thing to highlight here is that the most recent cross out of R2 or S2 will be on Wednesday, right? So we will just basically highlight this point on the daily. And I'm just going to double click here and just put a D1 here. I'm also going to highlight these 2 points, this point here as well, because it closed above R2. So this on this day is actually bullish as well. And at some point, because now prices have not gone back to this level, so I'll just leave it here to kind of reuse it again down. And again, for this last push up, this was on Monday open, so it wasn't a close of this Friday session. So this was still within the norms, and we only broke out on Monday. Okay, so based on these two regions, we can basically say that we are on a bullish narrative right now. Okay, but we want to also look at where are the potential target prices that we can look for in this move up. So the most immediate one would be on 27th of September, Wednesday, right, where prices fell below S2, and then it broke down and closes below S2. So we can just go ahead and highlight this point as well. This would be a critical point for us to take note of. So usually what happens is that once it breaks below, at some point it will retest this level before going down. Okay, so the bigger narrative is still a bearish move. So this was the bearish move. I'm just going to highlight this in red. Okay, right. All right. Okay, so the dominant trend is still a bearish move, but and in fact, once we broke out of this zone, or even on the 26th of September, right? Basically, we were in a bearish move since the 26th of September, right? And we could have, if you're using a grid, if you're using some sort of algo trading method, right? No matter the retracement, as long as you're on a bearish narrative, you would have TP'd multiple times. And the indication of when that bearish narrative has changed to a bullish narrative, it's somewhere on the 9th of October, okay, in which you have closed all your shorts and start looking for longs. Okay, so now we are in this position, right? And for us to actually go back to a bearish narrative, the idea is the same, right? We on a daily time frame, we would like prices to fall below S2 and close below S2 to give us a confirmation of the bearish move. Okay, so otherwise it would just be a bullish narrative till prices fall below S2. So what do I mean by that? For today, right? You expect prices to fall below S2, right? This is S2 for today, and close below S2, and this will then become a new resistance zone, and we would change from a bullish move to a bearish move. Okay, so even though the CPI has indicated that inflation is back up by 0.3% yesterday, right? And we saw this huge move down from 1884 all the way down to 1867. That's about 1700 pip move, right? The bearish narrative will only be in play if it went from this down to this level, right? So we did not see that happen. So we are still in very much in a bullish narrative, right? But what we want to take note of is this daily D1 resistance zone that was created on the 27th of September. Okay, so we can actually just zoom in to the 4 hours to kind of see how we can actually play the next 8 hours trade. Okay, so same thing, whatever that we did on the the daily, we can just do it on the 4 hourly. So on daily, we are on this bullish narrative. So R2, M4, right? Again, this has broken out of the R2 zone. Okay, I'm just gonna shift it down a little bit. So it's kind of like a waiting game for today, right? Right now we are waiting for this to close above the that is about another 45 minutes, right? Another 45 minutes. As long as prices close above this zone here, this will then become our support zone. Okay. This is the daily resistance. So it seems to be according to plan, right? So most likely the price will do something like that, and then this H4 will be the key zone, okay, for us to actually change into a bearish narrative. So if you're bear for today, right, this would be our sell zone. The confirmation, of course, if this is a high risk sell zone, right, the low risk sell zone would be for prices to fall below this break, and then we sell again down. Okay, so this is kind of like the entry here. 1879 would be the low risk sell. The high risk sell would be at 1889. Why would this be a high risk sell? Because this is a daily resistance. So usually for a bullish move, right, we will need the first bullish indicator is for the resistance to turn into a support. So again, if we are able to do this, right, we will expect something like that to happen for a bullish move. Okay, and so I can give you an example. On the daily time frame, whenever it changes from a bullish to bearish or bearish to bullish narrative, it's always a flip zone. So a support will flip into a resistance, or a resistance flip into a support. That will be the first indication of that move, that bigger trend. Okay, I can give you an example. We go to the daily again, and we just take a look at the most recent flip of change of character. Okay, so this was where prices, let's close out everything. So price came up, right? It went down, and let's take a look at this point, which started the whole move down. Okay, so if we go to the daily, right, you will see that this resistance zone here would have been the confirmation of the upward trend, right? And basically it broke below, and this became from a support zone to become a resistance zone, from a support zone upwards to become a resistance zone. Here as well, on this daily, you can see that this R2, M4 prices close above R2, and this would have become the flip zone. You extend it out a little bit, this would have become the flip zone from a support to become a resistance zone. Okay, same thing, this zone here, right? This would be the break out of R2, right? This would break out of the R2. This would have been the support, but instead it broke below, became the resistance, and then it went down. Okay, so same thing, this was the last support that broke below, because otherwise, if you look closely at the preceding days, prices all fell within S2 and R2. So these were all normal prices before it broke out and closed above R2. So this zone here would be the resistance zone to watch out for. Okay, so the most probable trade today would be for us to approach this zone here. If buyers are aggressive, we can actually get to see prices move directly up to this level. But otherwise, we can use the 4 hours, which is going to end in about 45 minutes, right? And we're expecting this move up. So London session, the buy here would be, I personally, right, would take a buy here, just below this M4, and target the middle of this zone here. This is a 8.46, and if you have already entered this buy, then you will be able to do the sell here, right? And your target would be somewhere below this level here, which is 8.35. Now, if you entered this buy, this sell will be low risk, right? Because then if you were to be stop out of your sell, your buy would have continued, okay? Otherwise, the next low risk buy would be here. Once prices can do a stop limit entry, and the next zone would be somewhere around this level. So this buy will be a very strong buy. Okay. This is a 8.23 as well. 8.23 RR. Okay. And if you sold at this daily resistance, then the next sell would be at this level with your stop loss just above, down to this level. Okay, so in fact, there are a couple of trades that you can take today, right? But I would say this would be the high probability setup, right? The next buy will be here, and then the double sell. Again, the daily time frame, we are following the most recent daily move. It is still on a bullish narrative, so the expectation is that buys will be much safer than the sells. Okay. What I mean by the most recent move, so on the this is my daily chart. So let's remove all of these entries here again. I'll leave this one because I think this is a high probability setup at 1879.87. Okay. So you to set up your daily pivots, you'll see that prices closed above Wednesday, closed above R2 on Wednesday. And so that was the most recent move where buyers pushed the price above the daily norms and closed above, right? This became the support zone, which it did on the CPI news. And then now we are trying to head up to this resistance level here. Okay, so for us to actually get into this trade, if you are entering the trade right now, that will be very hasty because of we are nearing the end of that 4-hour trading session, right? This is going to be the start of London, or he has already been. This is London Open already, right? 4 p.m. Singapore time. It's 8 a.m. London time. So the good thing is that you have your R2 and M4 for this current period falls within M2 to pivot, which is the entry zone for a buy. So this 1879 will be a good buy entry. Okay, so that is what I have for today for gold. This was the zone last night, right? So usually for CPI data, okay, you usually end up in a point where it is kind of like a 50-50 for a buy and sell. This was the take profit for your buys. So you would have gotten out if you bought it on Wednesday where you went through this this move here. And this was quite predictable because if it did not trade a sell and it went the other way, right? If prices, this was towards the end of the 4-hour session, if it broke above and closed above, then you would have entered here again and aim for somewhat higher. So there was no reason for us to actually buy here because the low probability, the high probability setup would have been for it to close this 4 hours above R2, and then for us to actually re-enter at this level. So there was no reason for us to buy. So in this case, right before the news, if it's not a buy, then the high probability setup would be a sell. That's kind of like a little bit of a game theory. Like if you know that the probability of a buy is the highest at this level here, once you have a confirmation of this zone, right, then you wouldn't have bought when the news was first announced. Okay, and then if it was a sell, see if it closed at this level, this was the zone here. When it started in the new 4-hour session, the pivot point was that resistance. So that would have been the sell. If you're following the ICT, what we call that, ICT methodology, they would call this the breaker block, right? So say for example, this was the move up, price retrace, and then you probably had this area of order block, right? Where it broke below, becomes a breaker block, and then you take your cells in this level down again. Okay, so if you can see that there are multiple tools that you can use to derive the same kind of analysis. So, and then down to this level, right? Could have been a further sell, right? When will you have seen that this is a legitimate buy, right? You can take a look at the daily. At the start of the day, you started M2, right? Once it breaks below this this channel, then it would have been a sell. The next buy entry that you would have entered would be this break of the R2 on the 4 hours, and then it came back down, tap it, move up, right? So if you did not enter within this because of this zone here, if you did not enter this zone here, then you would have entered the close, which is this level, and then make a higher high, higher low, and then now price is up. So again, this right now we are here. This is the once we get into the new forwards block, then this would be our entry. And that's why I said this is a high probability setup. Ideally, what we want is for price to fall back down here and then it goes up. Okay, but we might be able to see something like this as well. M3 and then up, right? But if that's the case, it's a bit more risky. So the high probability trade will still be this level up, and this trade here would be a 8.46 RR, which is not too bad for one trading session. All right, how to find an order block. Okay, so basically what we understand from an order block is basically just a bunch of orders that it's mostly done by systems where they collate or aggregate all their orders within one particular period of time, within that 1 minute, within the start of the hour, within the start of the 4 hours. and they execute it. They can't find a counterparty for that, so they execute it in market, and that causes a huge move to a certain direction. So for example, a lot of sell orders were stuck here, right? A lot of sell orders, it was in this space. And how do we know that? Because these two candles that were printed showed that there were not enough buy orders to meet the sell orders. So if you have enough buy orders meeting the sell orders, then basically you will have no movement at all. Okay, the only reason why there is a big black candle is because of overwhelming sell orders and insufficient buy orders at a certain level, certain price to absorb that sell orders, and therefore you see this huge move. Okay, so at the beginning of this sell order, you will need to flush out all of the buy orders here. So at this point, there was certain exchange. That's why you see the prices ranging within this area. So there's a bunch of buy orders that were either at market or limit orders at this level here. And so the definition of the order block is usually the move, the counterparty to that big move. Okay, so if you have a big sell move, the order block is this white candle here. So it depends on what time frame you're looking at, 5 minutes, 4 hours, you will see different order blocks, but the lower the time frame, the more accurate the entry will be, and the better the RR, the reward, risk to reward ratio. Okay, so another one which we can actually take a look at would be, so look at this, this is market rollover, right? In the early hours of Asian time, you see this big move up, this big move up. So all of this at the start, there are usually sufficient sell orders to meet the initial demand. And then there's just basically a lack of sell orders, and buyers just push the price up. When this happens, price tends to get back into this order because of the inefficiencies that happened here earlier, right? And then they start to buy up again. What do I mean by inefficiencies? Basically, there are a bunch of buy orders here that were not triggered because of this big buy order. So say, for example, a bank comes in, they buy this, they push price up to this level. There's usually a huge demand for it, right? The other folks in the market that put limit orders here were not fulfilled. So when price tend to move towards this area, it will reject it immediately because of all the unfulfilled buy orders, and so price will move up. Okay, so and again, all of these are kind of visual, so you can't actually code it out. You can code it out using basically looking at your candlestick patterns. But what I find something more intuitive for the systems to take, or something that's more systematic, would be to use your pivot points, right? So say, for example, I can give you an example. So for daily, this was the previous day on 11th of October, Wednesday, right? Prices broke above and closed above R2. And so this signifies a huge POI, point of interest, okay? And so how do we determine when price were to enter this area? How do we actually start to add our buys in? So we can just go down to a low time frame, say the 4 hours, and what we need for price to actually give us a confirmation is for price to break above R2 and give us this strong confirmation of buys, okay? And okay, if prices do not go above R2, right, then basically prices, there are more sellers than buyers, and prices will tend to go down. Again, if 4 hours is a little too long for you, you can take a look. If you're a scalper, you can take a look at the hourly. Okay, so price went into this zone here, right? And the first one that we can see, the break out of the norm, is right smack at the rollover. So once the rollover was 6 o'clock Singapore time +8, you see prices broke above, came back down. At this point, you wouldn't buy yet. You will need it for price to end above R2 before you get into this bullish narrative. Okay, so this would be the first indication of that rejection of this zone. This fell within R2 S2, so you can't actually trade in here. Well, but in the following hour, you can see that prices broke above R2. Okay, broke above R2, right? And then came back down. This became a support and then moved up. Then again, this was your H4 entry. So if you wanted a more concise entry, then this would have been the entry here. Once you have a profitable entry, say for example, if you bought at this level, you can actually enter in the following M2s, right? M2s up. So bear in mind, if you buy at a certain level, right? The only indication that you are wrong, that if you're buying and the only indication for a bearish move is for prices to fall below S2. So once price falls below S2 and closes below S2, you can basically close all your buys already. And evidently, you can see this entire morning in Singapore, right? You can see the M1, S2. We needed prices to fall below S2 to change into the hourly sell narrative. But every single hour, right, prices did not even enter M1 to S2. So we are still fairly bullish. Even for this entry, for this particular hour, we will need prices to fall back down to M1. And so if prices can get down below S2, then we are in a bearish hourly narrative. But otherwise, any entry above, it will be a high probability setup. Okay. So this will be a high probability setup. But if buyers continue to push the price up, then we will not have that entry. Then we would expect something like a consolidation here before prices go down. If prices goes above this daily resistance zone, then this will become our support zone, and we will continue to buy during the London session. Okay, so that's about it for today. Hope this was clear enough. We'll go through the same setups again next week. As we go along, I'll explain a little more about all of these pivot points and how we can actually use them to craft our trading plan. So hope this was useful, and I will see you guys again in the following week.